and welcome to the British Columbia Real Estate Association's Housing Market Update for March 2012. Home sales in the province edged down nearly 7.5% in February compared to the same month last year, and were down about 6% from December on a seasonally adjusted basis. As in January, an increase in consumer demand outside the Lower Mainland was more than offset by fewer home sales in Vancouver, the Fraser Valley, and Chilliwack. Persistently low mortgage interest rates were driven even lower last month by Canadian banks competing for market share. This has helped bolster both affordability and the purchasing power of households. Total active listings in the market were up 5% to 46,000 units last month compared to February of 2011. And market conditions continue to tilt in favor of home buyers in most market areas. However, local markets can vary significantly, so contact your local realtor to identify market conditions in your community. The average MLS residential price in the province edged down 2% compared to February 2011 to about $575,000, but was up 9% from January. While market conditions suggest stable price levels, March's spike in the average home price may signal a repeat of last year's dramatic but short-lived increase in the number of high-end home sales in Vancouver. Now let's take a look at market conditions around the province. This month's In Focus looks at the BCREA first quarter mortgage forecast. The opening months of 2012 saw competitive pressures in the Canadian mortgage marketplace, with many lenders offering rates heavily discounted from posted levels. The average 5-year fixed rate dipped 15 basis points to an all-time low of 5.14% in early February, before rising to almost 5.25% just 2 weeks later. Over that same period, many banks were offering headline-grabbing promotional deals, such as a 2.99% 5-year fixed rate. However, such low rates are unlikely to be sustained in the current environment of eroding profit margins and a potential rise in funding costs. Bank funding costs are seeing upward pressure from a stronger U.S. economic recovery and the potential reduction in CMHC's bulk insurance program for insurance on conventional mortgages. Canadian banks have been increasingly purchasing bulk or portfolio insurance in an effort to reduce risk and securitize many of their portfolios. However, as the CMHC approaches its ceiling, banks may be forced to find other, perhaps more costly sources of financing, which has the potential to put some pressure on mortgage interest rates and the availability of mortgage credit down the road. The 5-year fixed mortgage rate is expected to remain around 5.3% for most of 2012. However, as bond yields stop moving off their historically low levels, some modest increases in rates will likely result by year-end. Look for the 5-year fixed rate to rise gradually to a still very low 5.5%, and the 1-year to reach 3.5% at the same time. Of course, the flip side to improved economic conditions and the associated employment growth is relatively higher mortgage interest rates. Well, that's it for this month's Housing Market Update. Hope to see you next time. Bye for now.